Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq, with daily insight on the Nasdaq-100 Index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining us this afternoon, we have Joyce, Managing Director on Nasdaq's Market Intelligence Desk, for an update on technical levels to watch in the Nasdaq-100 across multiple timeframes as we kick off October and the fourth quarter of 2020. Brian, it's great to have you with us. Welcome back to Trade Talks.
Thank you, Jill. Thank you for having me.
All right, let's pull up the charts here and look at a number of time frames. We like to start with daily for the day traders, and we'll look a little bit longer term for the investors.
Yeah, so we've been looking at the futures on the Nasdaq-100 just to look at that really short-term time frame, again, because they just happen to be a little bit cleaner than the cash index. And this is how we were set up last Friday when we spoke about a potential double bottoming pattern here with the low at 10,656. We highlighted last week that the confirmation of this pattern would be a move above 11,222. If I zoom out a little bit, we can see this is where we are now today. So we did get that breakout back here earlier in the week. We did pull back and retest it. It held support. Now we're, I don't want to say off to the races, but we're now marching higher. So far, so good. This is your risk level in case you're long here and you want to, say find a potential stop to cut that loss if it goes against you. So the measured move to see where this could take us is we go up to about 564 points, which was the size of the consolidation range. And then if we measure that higher, it takes us up to about 11,785. So we have about another 2% to go to reach that minimum measured target of this pattern, which broke out earlier in the week. We now take it to the daily time frame, looking at the cash index. What I like about this is that we have gotten back above now the 50-day moving average, which if I can type correctly, we'll see in a moment. And so here we could see we have moved back above the 50-day average. It was support, turned into resistance, and now it's again now support. And we're moving above this initial rebound high, a pivot at 11,566. So we're about last sales 11,605. So we're beginning to break higher from that. So we're breaking above resistance levels. We're breaking out of short-term bottoming patterns, and something we like to see as we move along our time frames. Longer term on the weekly pattern, last week we highlighted the piercing line bottoming candlestick, which is when we have a downtrend and then a gap lower to start the week, but then we close the week out at the midpoint or higher of the prior week's range. And that is what we did last week. And this week, what did we start out with? We had an opening gap higher, and now we're Thursday. We're just over one session left in the week, and we are trading at the high of the week's range. So that's confirmation for last week's reversal candlestick. So on all three time frames, the 30-minute period, the daily period, and now the weekly, it looks like we could have already made a low in this pullback.
Yeah, that'll be interesting to see, considering that October is historically one of the most volatile months, and of course 2020 has been nothing if unprecedented, and we're going into the election cycle, and it's largely expected not just to end on November 3rd and perhaps see some more volatility into and beyond the election. So what kind of indicators are you going to be watching there, or is there's so many outliers between the election stimulus, COVID-19 vaccinations? It's just that the confluence of so many outliers out there this year.
Yeah, there's certainly a lot of risks. We have, along with what you just mentioned, we've had very high valuations. The S&P 500 multiples, forward 12 multiples over 21, well above the 5-year and 10-year trends. I think are 15 and 17 roughly. So there's always risk regards to geopolitical events with China, with trade. We've had a lot of social risk here in the U.S. these days, so that's going to be something that's a bigger risk than normal coming out of the election. And the election is potentially going to be contested, where the courts get involved and decide maybe who the winner is. So certainly a lot of risk to look forward to, so to speak. The seasonal trends are favorable for the fourth quarter. As you noted, September is historically very seasonally weak, and we did see that this year. But August is also typically a weak month, and this year was the best August in 34 years. So 2020 has been anything but average, and so and in 2019 we'd had a very weak Q4. So Those are averages. We'll see what happens. Anything is possible. Again, we've had a phenomenal move off the lows, 84% for the Nasdaq 100. We pulled back 14%. We're now marching higher. So what I'm going to look for is to see, can we make new highs, on this run that we're making right now, and if we can break out above that, that's the confirmation I want to see. Particularly with the Dow Jones Industrials, it's the one major index that has not made new highs yet. Even transports have made new highs. So if we get a confirmation by the Dow, I think that would be another supporting factor to say, hey, the bull market is underway and it's still in the relative early stages.
All right, Brian, appreciate the update. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.